Well, holy smokes, everyone. It looks like now even the bulls are starting to get worried and starting to turn a little bearish. In this video, I'm going to go over a man that predicted the exact current situation that we're in, the current stock market melt up in the S&P 500, the S&P 500 going over 4,000 and hitting 4,500. He predicted all the money printing and the inflation that would come that we're experiencing today last year in April. He predicted, like what we're seeing, that stocks would go up and it'll look really awesome and it'll lure lots of retail investors in right before the rug pull and a crash that would rival the Great Depression and where stocks could fall as much as 80%. Well, by crikey, that seems impossible, but it's when you least expect it, some black swan event could come that could trigger such a crash. And with the Federal Reserve and all the central banks already used most of their ammo on the last previous financial crisis, they may not be able to get us out of the next one that we're facing. So everybody, let's go over this man's predictions, his warnings, and the reasons why he thinks this scenario is going to play out. Well, have a look at this, everybody. Contrarian macro strategist predicts a final market melt up before bear market to rival 1929 when we had the Great Depression. And last time I remember, that didn't turn out so good. And I'm sure if you went back to the Great Depression, the dot-com bubble, 2007, and you tried to warn people a big crash is coming, they'll say, oh, the market only goes up. People have been, predicting 100 out of the last 3 crashes. Pff, stop it. It's never going to happen. But it's when we start to get this euphoria in the markets, that's when you know we're getting close to the peak. So who is this man that we speak of? David Hunter, Chief Macro Strategist at Contrarian Macro Advisors, has for some time predicted a final melt-up stage of the market cycle before markets experience historic crash to rival 1929. And again, we can see this article was put out in April 16th, 2020 last year. So this melt-up stage is now underway as markets recover from an initial sell-off caused by the pandemic, Hunter said on Contrarian Investor Podcast, adding that he did not and could not have predicted the pandemic that we're seeing right now, and nobody did. Well, what has happened since April last year? Well, let's hit the charts, everybody. As we can see, since April, we have seen a huge melt-up. The S&P 500 going from around 2,500 in April all the way up to 4,500, nearly going up 100% in just 1 year. If that's not a melt up, I don't know what is. And he warned, what comes next is a secular top that I expect to be a high watermark for decades to come, Hunter says. After markets have peaked around late summer, a global deflationary bust will ensue with as much as an 80% downside for equities. So what are we seeing, people? We're seeing really crazy high inflation. Now, what does that mean? Central banks will have to respond to this, or hopefully they respond to this like the Federal Reserve has said they're going to do. So in late 2021, they're going to be tapering and pulling out money. But if the economy weakens or there's more lockdowns, this could turn inflation into deflation very quickly. But I don't see that happening anytime soon, especially with all the supply issues around the world and supply problems. But he is warning, and we'll get into later in the article, that this will happen after 2 years. So that was in 2020. So it's looking like we could face this deflationary bust in early 2022. And listen to this warning and prediction, everybody. This is one of the craziest and wildest predictions I've seen so far, but is it possible? So he says it will be a bear market of historic proportions, culminating with the S&P 500 around 800. That's right, that's not a typo. Basically, this will be the biggest bear market since the 29 crash, aka the Great Depression. This unwind could happen quickly. Faster than what we saw in 2008, 2009, we can go from peak to trough in less than 6 months. Well, holy smokes, everybody. That is a big statement. He's saying during this next crash that could come, the S&P 500 could fall down to 800. And this would be one of the biggest and steepest, fastest bear markets we've ever seen. Now, again, you may think it's impossible, it'll never happen. But again, that's what all people thought before the Great Depression, before 2000 and before 2008. So we do have to be prepared for whatever scenario could come. So let's get into some of the mechanics, you could say, that could lead to this steep decline. So this unwinding of decades of debt buildup, which of course what we're seeing right now, we're in a debt-based economy. The government is in heaps of debt. The stock market is high on margin right now. There's so much derivatives. All it could take is some counterparty risk for some financial institution to default, like what happened in 2008, to cause a stock market crash that nobody saw coming. This dynamic worked great on the way up, aka all this debt helped it go to all-time highs, which is why we have had the highs we had, but they really punish you on the way down, and they also speed up the decline, says Hunter. Well, what have we been talking about in the channel, everybody? Margin debt. And this is what he's talking about, leverage. This is what can make the crashes very quick and come out of nowhere because it causes margin calls. Like what we saw in 2000, the red line is margin debt, the blue line is the S&P 500. When that peaked, we saw a big decline. Again in 2007, again in 2018. And we just saw margin debt peaked and it dropped for the first time in July. So it'll be very interesting to see if we see another drop in August as well. Not to mention the Warren Buffett indicator right now, the stock market is 238% of GDP, the highest it's ever been. And this is signaling the market is extremely overvalued. Another indicator, the S&P 500 price to earnings ratio. Right now it is at 35, and the last time it was this high was in the dot-com bubble and in 2008. So again, all indicators are screaming and it's saying, hey, things are getting crazy, everybody. Wakey, wakey, time to get prepared. So central banks have virtually unlimited ability to print money during a deflationary period. Flooding the system with liquidity is certainly called for in these times, and again, this was April 2020, which is what they did. But listen to this warning, which has now come true. But once inflation returns from its 30-year hibernation, this dynamic would change and the Federal Reserve will be out of bullets. Well, what are we seeing, everybody? Inflation is at 3-4 decade highs. We're seeing the highest core inflation, the highest CPI inflation we've seen in decades. And again, the Federal Reserve is now responding. The Federal Reserve has finally give up. They're saying, okay, inflation is not going to be transitory. Don't worry, we'll taper this year. And they are out of bullets because, they're printing hundreds of billions. If we do see a crash and say, okay, we'll print 200 billion, that's not going to be enough to instill confidence in investors. They're going to want big action. They don't have much more big action to give. And again, another prediction he states here, which is coming true right now. What I believe follows this is I believe our first inflationary recovery cycle since the 1970s, which we're seeing right now. Hunter remembers this period in history well, as it was then that he cut his teeth on Wall Street. We'll see a global inflationary cycle, probably even that exceeds the one that ended in 20% inflation in the 1980s, he says, but he's probably 2 years away from that being the case. Well, this is crazy, everybody. So again, last year he warned we'll see a melt up in the stock market, which we're seeing right now. Then he said we'll see a huge inflationary cycle, crazy inflation that we haven't seen in decades, which we're seeing right now, followed by a deflationary bust because the central banks aren't going to have ammo to fight this current crisis. Now, just some of my thoughts and opinions on how likely I think this is. I don't know if it's very likely that we'll see an 80% decline. I don't think it's going to happen this year, but I think early 2022, if inflation hasn't got under control, and the biggest risk is if they have to start hiking interest rates like in the 70s to fight this inflation, and if interest rates go back up to 5% and all of a sudden we start seeing huge defaults on margin debt, on mortgages, and we see a couple financial institutions go under, this is the only scenario where I see this 80% decline playing out. So everybody, although everything seems awesome, sunshine and rainbows and euphoria in the markets right now, we have to learn from history and have to take out the FOMO and emotions from this. And even though, all the bears have been calling a crash and it hasn't come, that just means we're getting closer and closer to the inevitable because we've never had a 13-year bull run in history. But everyone, what do you think? How likely do you think this scenario is to play out? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest happening in the stock market, the housing market, and global finance news. Now, if you're bored, I'll put up some of my other videos here. I'll see you all there.